Mahesh Joshi, Head Equity at MarketSmith India. And of course, we continue to have Kunal Bothra with us. Mahesh, this 3 to 4% crack on HAL, opportunity to buy, you reckon, or not so much? Now, this one trades at 30 times earnings, trailing 12 months. So suddenly, with that long order book, large order book, would it look interesting to you?
Afternoon. No, again, two things. One, I think the order book itself is massive. So I think it does give the book to bill or the revenue visibility over the next few quarters and years. But I think a couple of news which probably just disturbed the entire balance. One, I think a big tender in which HL was probably expected to probably win. That probably there was some media articles on that. And the recent article where the news flow where HL has just given a clarification at this juncture. So I think if you spread this over Harsh over the next few years, I think, and as they execute well, I think revenue growth is going to probably compound at a decent pace. Are margins going to compound in the same ratio? No, they're not, right? So I think the margin improvement is going to be gradual as both cost efficiencies and operating leverage kicks in with better performance in terms of those high margin orders with minimal working capital requirements to fulfill them on time. And therefore, I think there will be a quarter or two every 4 or 5 quarters or 6 quarters where you will probably see a miss in terms of estimates that the company is probably expected to do. And that happens with every defense company. And that might be because of elections, that might be because of monsoons, etc. But overall, I think the industry looks well poised. The allocation in terms of the union budget is sufficient. There are sufficient orders expected to come through. And the orders that HL will also get will also include the O&M component, which also gives it that added advantage in thrust in terms of those repeated orders and orders with a longer term visibility as well. So whether I go out there and buy right now, I think the stock is consolidating. I think let there be some clarity. Let us see how I think the macro developments and micro developments are shaping up. Expensive in terms of valuation. But I think it's forming a nice base as we see it in markets with India as well. It's a wait and watch. We've got that on our radar, but let it consolidate first.
Kunal, what is your sense? You think the weakness in any of the defense names could be bought into today?
Well, it could be. I think for names like HL, etc., this could be a good opportunity where the stock is forming a double bottom of sorts. It's retested the previous, I think, fortnight low for itself. 4,000 was the previous low for HL, or slightly below those levels. And from there, the stock had seen a decent bounce back of almost 250, 300 odd points. So I believe that this retest, and that too on the back of slightly higher volumes, could probably be a point where the stock may try to form a decent bottom. The demand could probably originate a little bit more better. More of the other charts also, I think, if I can probably include likes of BDL, Bharat Electronic, etc., these stocks are also showing signs of good recovery for themselves in the last fortnight or so. So I would believe that as a pack, many of these defense counters, they would start to look attractive at current juncture.
Okay, very interesting. What we'll do is step into a very short break. We'll continue talking about stocks. Very curious to know what Mahesh thinks about the IDFC First Bank move today and the AU Small Finance Bank move as well. We'll speak about that on the other side of this very short break. Looking at IT, what Jeffrey seems to suggest is look at the higher growth mid caps rather than the large caps. Let's take this conversation across to our fundamental experts joining us. We have Ruchit Jain, of course, from Motilal Oswal, of course, on the technical side, but we have Aditya Shah, founder, Hercules Advisors, joining us on the fundamental side. Mahesh Joshi continues with us. So we've got a battery of experts on this. Mahesh, let me come to you first. We've had this conversation in the past, but talk to us about IT in particular. Where do you stand? Are there opportunities available? For example, I'll take the example of KPIT Tech. I was just looking at the stock price. It's trading at 25 times 1 year forward. How many times in the last, last 5 years we've seen KPIT Tech trade at 25 times 1 year forward? Is this an opportunity, especially in the small and mid cap basket?
So Harsh, I think very, very selective, because what the sector is going through is extremely disruptive times as we speak. And as the new technologies develop and manifest themselves, I think you are going to see these spurts of sentimental reactions happening onto our stocks as well. In terms of contribution for the large caps, as far as AI is concerned, it's very, very minuscule as we speak. And even for the mid-cap universe, I think a stock like KPIT, as you rightly said, I think a large part of its revenue contribution does come in from ER&D. And therefore, I think with more progress expected to happen as we head into FY27, specifically in terms of electric automation, platforms, products, even BESS is a huge segment out there in terms of power. And therefore, I think when you look at alternatives in terms of what IT companies can probably provide, I think a few of the companies that probably move a tad bit ahead in terms of being more agile and more adept in terms of adoption of not just generative AI, but also agentic AI and the application layers of agentic AI as well. I think those are the companies that might probably be those differentiators into the markets as we speak. So KPIT, yes, you're absolutely right. I think valuations have come up. They're also into the right areas where growth is expected to happen over the next few years. You've got emphasis within the mid-cap IT space, which is doing a lot more work within the AI domain as well. And one unique company which has probably come on our filters at markets with India and less talked about is Datamatics as well. So Datamatics is providing the entire AI backbone support as far as digital operations are concerned to a whole host of companies. And it's not just the domestic companies, but global companies as well. And therefore, if you look at the revenue trajectory that they're probably building up, the kind of models that they've probably developed, whether it's both generative AI as well as agentic AI, across various domains. I think that is mind-boggling as we speak. And therefore, I think the back-end architecture and infrastructure is also supported through the AI mechanisms. They're also getting into cloud. And therefore, I think the kind of cash on books they have at 540 odd crores also gives that support that one probably needs. So very, very selective, but I think a few of these stocks probably appearing on our filter list as we speak.
Aditya, where do you stand on this argument?
So from my perspective, a lot of negative news has been built on a lot of these IT companies. To my mind, it seems that these IT companies will not survive. I don't think that is really the case. As these large cap IT companies come down to a valuation of 15 times, 10 to 15 times, from purely from a valuation perspective, even if you don't get any growth per se over the period of next 5, 10, 15 years, the valuation purely is turning very, very good for many of these IT companies. Some of these IT companies do give out a dividend yield of about 2 to 3%. So that also really starts to look attractive to me. Large cap IT, HCL Tech, TCS does look attractive to me. And then going on to the mid cap IT space, companies like L&T Technology or KPIT, as you said, these smaller companies are also starting to look attractive. The entire sector has been beaten down on the back of this AI wave that has taken place in the US as well as in India. But I don't think this is the end of the IT sector. Many of these IT companies will adapt to the changes that will come in through AI, and many of these companies will use it as a booster to add another leg of growth into their basket. So yes, growth in the shorter term may slow down, but in the longer term, all of these companies will adapt, and I am positive on the IT sector over a longer period of time.
Rishit, I want to get you in on some of the news-triggered stocks which are seeing acute weakness today. IDFC First, AU Bank, and let's pick up on these two. How much more weakness do you foresee in the days to come on the charts?
I think that gap down opening which we witnessed today in these stocks, and post that gap down also, we have witnessed the selling has been supported by high volumes. And whenever we see such high volume-based selling, those stocks, tend to underperform in short to medium term. So I think, for IDFC First Bank, even the 200 DMA has been breached with a gap down opening. So I think, that underperformance is not only for 1 day's move that we are witnessing today, but in short term, that underperformance is likely to continue for stocks such as IDFC First Bank. Even AU Small Finance, we had seen a good bit of rally in the recent past as well. The stock breached its 50 DMA today, and that too with good volume. So not expecting that kind of big price-wise dip in AU Small Finance, but at least a time-wise correction could be seen in AU Small Finance. Whereas, I think even if most of the banking and the NBFC space perform from here on, these could be a couple of names where underperformance should be expected now.
Understood. In fact, UPL, that's the other one. And Kunal, I want to get you in on the charts. Whether this adjustment of the merger you think will last for some more days, and will we likely see some more weakness after the 15% fall that we're already seeing?
Yeah, I think the stock now seems to have started off a fresh trend on the downside, because it's not just broken below the previous lows of 660, 680, which it had tested, I think, a couple of weeks back, but it's also managed to break below some critical moving averages, and that too on the back of very high volumes the stock has shown today. So I think today's volume is apparently one of the highest volumes the stock has seen in the last, I think, 1.5 years, maybe more than that. So that tells you that this could be a decisive sell-off for the stock price trend, and this could have near-term ramifications into the stock price trend going forward. My sense is that if the pullback for the stock price in the near term is not substantial enough, then you might probably expect the stock to even break below the 600 levels potentially in the next few weeks.
Okay, Aditya, I read a tweet coming from you in particular this morning with regard to everything that's playing out with regard to IDFC First Bank in particular. Post that, of course, there was the con call as well, which happened. Are you satisfied to a certain extent with the explanations that have come through? And now with this 15-16% kind of hit on the stock price, does it start to look interesting? And also talk to us a little bit about AU, because that's the other casualty of the day. Is this a decent opportunity to bite into a couple of these names?
So let me quote what I said on the tweet. P. Vaidyanathan was on the con call. He said, "Galti se mistake ho gayi. It is only limited to one branch and some employees. So please forgive us and look at the growth opportunities that are there." I don't think any of those things can be bought. It is a serious fraud that happened from the IDFC First Bank employees, and IDFC First Bank must undergo system checks and process checks. Mind you, passing of a check has a maker and a checker process, and both of those processes failed on a 500 crore rupee deposit. It is huge, it is big. I don't think that IDFC is going to recover at least for the next 1 or 2 quarters until the entire quantum of this fraud emerges. Questions will be asked of V. Vaidyanathan as to how the systems and processes are being cemented going forward, moving forward. The audit will take about 4 to 5 weeks to fructify, and then we will know the exact law that IDFC First Bank will take. So from my perspective, in the near term, IDFC First Bank will remain range bound. The stock does trade at about 1.25 times. It does start to look attractive at about 1 time price to book, subject to the fraud being cleared out and we exactly knowing what happens and systemic changes being made. Now on AU, of course, AU says that it is not a casualty of this fraud. It has not detected any fraud on its books, but AU is also undergoing a audit, and on the audit we will know if AU is also involved or not. But AU has the Haryana government has taken out the deposits from AU Small Finance Bank. Finally, for IDFC First Bank, government deposits, state deposits, and PSU deposits are 10% of the total deposits. I expect some bit of outflow of deposits both from IDFC First Bank and from AU Small Finance Bank. That could have a near-term impact with respect to the growth both on deposits and the loan side of it. So near-term looks very fragmented. At 1 time price to book, IDFC looks interesting. Of course, AU is really very expensive, so I will not touch AU for the time.
Very, very clear with regard to the advice there. Mahesh, let me broaden the question a little bit. This commentary coming in with regard to the fact that this is a one-off account, this is one branch. How comfortable are you with accepting that as is? Because obviously there could be other branches and other possibilities of something like this emerging in some of the other branches as well. Are you fairly comfortable? Should an investor be wary of possibilities within other branches also cropping up, or are you comfortable with the way management is guiding?
No, so as Aditya put it, right, I think what really happens is when an event like this happens, it really erodes the entire trust factor that one has in the bank. And banking, trust you me, Harsh, is based on the trust factor quite significantly. So I think to put out a statement that it was a one-off, I think it has to be proved, whether it's a forensic audit that will get conducted, I'm pretty sure it will, and a general audit check in terms of systems and bank processes that will happen over the next few weeks, whether there are any loopholes into the system itself. And therefore, I think as that trust factor has got eroded, which is very, very critical to the system as a whole, I think to gain that trust back will take some amount of time. You've seen a lot of instances in the past what happened with Yes Bank and the resolutions thereof, but the trust factor took a long periodicity of time to probably come back. And therefore, I think from a valuation perspective, if it corrects further, it might start looking attractive. But valuations are not the only thing that matter, right? And therefore, I think how the management will come out of all this, what the audit reports will state over the next few weeks and months, what the RBI has to say on this, everything is going to probably become very pivotal and critical in terms of the bank itself going forward. So yes, I agree with Aditya. I think the trust factor has gotten hit, but I think a period of consolidation for IDFC.
Right. Okay. Well, getting back to UPL, and we were just chatting about the weakness in the stock. We spoke with the management of.
Let me come back to that huge restructuring of UPL. Aditya Shah, tell us what your view is, because the stock has taken a beating on the back of this announcement that's come in. It's now nearly 15% lower. What is it that the street or the management has missed here? Because there is value unlocking, at least that's the intention which they've voiced. But the street looking at it very unfavorably.
Harsh, I've not been tracking this development, so will not be able to comment on it.
Sure, okay. And Aditya, I'm also curious to know where you lie with regard to cigarette prices and the hike which can offset the indirect tax impact of cigarettes. With regard to Godfrey, for example, the stock is down 11.5% in trade today. We were starting to see a recovery in some of those names, ITC, Godfrey and the like. Again, today is a bit of a tough day for some of these counters. Where do you lie in terms of your argument on cigarettes?
A major part of government tinkering taxes is it can play with a tax on cigarettes. That is the reality of it on ITC or Godfrey Phillips or any of these companies that are indulged in all of these activities. So I have over a period of last 4 or 5 years, I have formulated a formula. Whenever ITC comes in the range of 200 to 180 to 200, it's a buy, and when it goes to 400, 450, that's a sell. ITC will remain range bound because the government will consistently and constantly keep tinkering on the cigarette prices, and nobody has any control over it. So these stocks will turn slowly and steady. These stocks are turning cyclical in the sense that government tinkering with the cigarette prices make sure that these stocks don't remain long-term compounders. And some of these stocks do have good dividend yield. So if you get into these stocks at a very good valuation, then you can keep eating the dividend that these companies really give. So yes, tinkering of tax from the government is a big overhang for all of these stocks.
Yeah, it is. Ruchit, what's your reading on some of these tobacco manufacturers, the Godfrey, VST, or even ITC for that matter?
We have already seen a good price range correction from the highs in all these names in the last few months. But it seems that the momentum readings were a bit oversold from where a bit pullback move has been seen. But some bit of consolidation or a time-wise correction, I think, should happen going ahead. So downside seems to be limited in terms of price-wise correction from here on in stocks such as ITC or Godfrey Phillips. But before resuming any kind of uptrend, I think some sort of sideways trend or range-bound moves could be expected for next couple of weeks.
Okay, all right. So that's the take coming in. Ruchit, I wonder, some of the other names. Let's pull up something like a Newland Labs. Stock is up nearly 8% in trade as we speak. There's also an Aegis Vopak. That stock is perked up 9%. Do you have a view with regard to some of these? And SKF is up nearly 6% as well. Any view on any of these names?
Well, I think all the names are showing signs of a one-day's up move. But we have seen in the recent past as well that the follow-up move is more important rather than what happens in just one day's up move, because the overall trend does not seem to be positive, whether it be for Newland Lab or Aegis. So I think in case if the stock shows some follow-up moves led to with good volumes, then one can explore for fresh buying. Otherwise, it could be still on a wait-and-watch approach.
Okay. Aditya, you track banks closely, private versus PSU. Do you have a view at this point? PSUs trade at maybe 30-40%, at least 30 to 40% discount over private, and with ROEs which are slightly superior in that sense. You believe that's sustainable? Would you prefer the PSU pack?
So ROEs in PSU banks will remain cyclical in nature. They are at lifetime highs. PSU banks will continue to do well over the period of next 1 or 2 years. the growth will be the deciding factor for returns over a period of next 1 or 2 years. I think the top pick will continue to remain SBI. The sheer scale of SBI and the sheer power of SBI will mean that SBI will continue to do well. But my preference will continue to remain with the private sector banks for a contra pick amongst the micro lenders. Micro lenders are seeing a sharp turnaround in their fortunes. Micro lenders have seen a lot of NPAs coming about over a period of last 1 or 2 years. And as the cycle will turn around, the maximum delta you will get is within the microfinance lenders. And coming back to the larger peers in the private sector banks, ICICI Bank, both ICICI Bank and HDFC Bank will continue to do well as HDFC Bank continues to get back its margin. I think the moment the margins will come back for HDFC Bank over a period of the next 1 year after that, HDFC Bank will outperform every other stock in the market. Market is just waiting for that margin recovery to happen really.
Okay, interesting. All right. So that's where we're placed where banking is concerned. Let's quickly start winding down. Aditya, Ruchit, let me thank you. Let me allow you to leave for the afternoon. Thank you for your views. Very quick.